Hey everyone, thanks for listening to this homework help video for Chapter 8 Financial Accounting, Cengage. In this example, we're going to go through an aging of receivables problem and estimating the allowance for doubtful accounts using an aging schedule. Trophy Fish Company supplies flies and fishing gear to sporting goods stores and outfitters throughout the Western United States. The accounts receivable clerk for Trophy Fish prepared the following partially completed aging of receivables schedule as of the end of business, December 31st, 2024. And we have our not past due, days past due, um, 1 through 30, 31 through 60, 61 through 90, and then AAA Outfitters and Brown Trout Fly Shop as our two customers here. However, the following accounts were unintentionally omitted from the aging schedule. Assume all dates are for the current year except for Wolf Sports, which is due next year, so the January 20th of the following year. And we have a aging class and a percent uncollectible estimate for each of our aging categories of these accounts receivables. We're going to determine the days past due, complete the schedule, estimate the allowance for doubtful accounts, make the journal entry, assuming that before adjustment, the allowance for doubtful accounts is a $3,600 debit balance, and assuming that the adjusting entry in 4 was omitted, how much would the omission impact the balance sheet income statement? Okay, so we're going to start by determining how many days past due each of these amounts are. And this is as of December 31st, 2024. And so the simplest one is January 20th, Wolf Sports. It's 0 days past due because it's due in the future. And we'll keep on, these are in order from least to most past due, so we'll start with the ones that are the least past due. Um, December 7th, if we take 31 days in December minus 7, that's 24 days past due. November 28th, we have 31 days in December and 30 days in November. So we take 30 minus 28 plus 31 days in December, and that's 33 days past due. November 7th, we take 30 minus 7 plus 31, and that's 54 days past due. The shoot sports is on October 20th, so we take 31 days in October minus 20 plus 30 November plus 31 in December, and we get 72 days. Cicada Fish Company, we have only 1 day left in September because there's 30 days minus 29 plus 31 in October plus 30 in November plus 31 in December is 93 days past due. October 10th, we have 31 minus 20 plus 30 plus 31. We get, actually, wait a minute, I messed this up. We have October 31st minus the 10th plus 30 plus 31. We get 82 days past due. And then May 22nd, 2024. May has 31 days. So 31 minus 22 plus 30 days in June plus 31 days in July plus 31 in August plus 30 in September, 31 in October, 30 in November, and 31 in December, and we get 223 days past due. And there we go. That's how old each of our receivables are. We have all the amounts here, and this is what was omitted from the aging schedule. So, right, we had the existing two that were already there, and that kind of just gives us an example of how is this supposed to be written out. And now we need to determine where each of these will go, what bucket each of these will go. We'll start with we'll go in order. So for Adams Sports and Flies Company, and we'll put in the amounts first so we don't have to keep going back and forth. Adams had 5,000, Blue Dun Flies 4,900, 8,400 for Cicada Fish, 7,000 for Deschutes Sports, 3,500 for Green River Sports, 2,400 for Smith River, Western Trout 6,800, Wolf Sports 4,400. And if we total all of these up, it comes out to when our total has to include the 1.3 million initial um, as well. And if we total all of these up, we get 1,342,400. Perfect. Okay, now we need to put each of these into buckets. We have our days. And so Adams Sports and Flies Company, that's going to be in our oldest bucket because it's over 120 days past due. Blue Dun Flies is 82 days old. So that's going to go in the 61 to 90 bucket. Cicada Fish Company is 91 days. So that goes in the 90, or it's 93 days. So that's 91 to 120. Deschutes Sports is 72 days old. Green River is 54 days old. Smith River is 2,400. And that is, let's see here, 33 days. So that goes in the 31 to 60 bucket as well. And then Western Trout is 24 days. And the final one, Wolf Sports, is not past due, so that's 0 days. Perfect. Now we'll subtotal up all of our other items here. And what we do is we just add up this subtotal amount plus each of these individual. And now we have to estimate the percentage uncollectible for each of our amounts. And this is different based on how past due it is. And from a debt collection standpoint or receivables collection, amounts that are less, amounts that have been overdue for longer are much less likely to be paid back. And that's basically just a fact of debt collection, right? If they're already past due 91 to 120 days, we're estimating that only 40% of those balances are going to be collected in any way, whether that's in bankruptcy, whether that's in just collections, doesn't matter. But it's really important to estimate this because we need to provide a valuation on the balance sheet for our accounts receivables that's accurate. And we need to, under the matching principle, we need to match the bad debt expense to the period in which that bad credit was extended. Because if we're extending credit to facilitate the sales and operations of our business, the uncollected accounts need to be associated with the sale that was made. That bad debt expense needs to be in that same period. And that's why we go through this whole process of estimating bad debt expense. And this aging of receivables method is a balance sheet focused approach, focus on the valuation of them, of these accounts receivable. And in my opinion, it is the most accurate way that we can estimate, unless we're looking at the, individual credit scores of each account in each bucket. But really, we're just a business, and looking at not this is the accounts of a business, a fishing business, not a bank. And we're just looking at how past due is it and historical patterns to determine the percentage uncollectible. And so they give that to us, the percent uncollectible, 1%, 2%, 10, 30, 40, and 80%. And then the estimate of uncollectible accounts, we take each one and multiply it. So 1% of 1% of 754,400 is 7,544. And then 2% is 55,936. 10% is 12,590. 30% is 15,570. 40% of 28,400 is 11,360. And 80% of 85,000 is 68,000. And we add up each of these to arrive at the total estimated uncollectible accounts at $121,000. We check our work here. Perfect. We did well on this. Now, estimate the allowance for doubtful accounts based on the accounts receivable schedule. That's fairly simple. It is simply our total estimate of uncollectible accounts. And that's 121,000. And allowance for doubtful accounts is a contra asset account meaning that it has a natural credit balance. And after an adjustment, it has to have a credit balance of $121,000. And if we think about the T account necessary for this, our initial balance was 30 debit balance of $3,600. So if our initial balance was $3,600 and a debit, and we want our balance to have a credit balance of 121,000, then we need to credit allowance for doubtful accounts by the 3,600 plus the 121,000 in order for it to come out to that right amount, right? So 124,600 is the amount that we need to credit the allowance for doubtful accounts and debit bad debt expense in our adjusting entry. And we have the fourth question is assuming that the entry in 4, which is this adjusting journal entry, was omitted, how would the omission affect the financial statement, specifically the balance sheet and the income statement? And on the balance sheet, our assets would be overstated. It's a contra asset account. It's focused on the valuation of our accounts receivable, and it would be overstated by 124,600 because the allowance for doubtful accounts would be understated by that amount. Owner's capital would be overstated because it would overstate our net income, or would, by understating our bad debt expense, net income would be overstated, and it's all the same amounts, right? So thank you everybody for listening. If you found this helpful, make sure to like and subscribe, and good luck with all your homework. Thank you.